Well, hello everyone, and welcome to Thursday, the 13th of February, 2025. I am Delbridge, Benchmark Realty, Murfreesboro, Tennessee. We've got a couple tabs open. Let's see if we can get this done expeditiously without me getting too tongue-tied by being in a hurry. Because remember the old axiom, haste makes waste. We're going to spring another one on you in just a second. If you like this content, please go to CallDelToSell.com, find the tab that says on YouTube, click it, and it'll open up a page of QR codes. There you can use a smartphone to scan and get to the YouTube page, or you can just mouse over and click it on a PC. There you'll be able to subscribe to this little button over here and click the notification bell so that YouTube will notify you when each Friday's blog has been uploaded. Thank you. All right, well, let's take a look at our first stop today, which is our old friends at Mortgage News Daily. Right there they are. 30-year fixed rate. This is a daily survey. I want to remind everyone about that in case they have forgotten that the Mortgage News Daily is a daily survey. We go over this sometimes because see how much more noise that we have on this than we do the weekly surveys of Freddie Mac. If I can hit that orange. Come on, there we go. Freddie Mac has still not changed any directions because it's weekly. We see MBA for some reason is behind the times. The last time we had an MBA was 1/22/2025. Don't know what's behind that. But we see this knee-jerk, this gut reaction that we've got going on because we had some inflation news come in this week. We had the CPI come in yesterday. The PPI came in today. They're both up. Spoiler alert, they're both up a little bit, but they're not significant. But we're going to go take a look at what's going on. And remember, the hype, the absolute hype that we have to deal with that affects how markets, because markets work on feelings, not facts. And even if we tried to work on facts, it's very difficult because our facts are constantly colored by feelings. And I have an example of that. But let's get right to that center panel. I have pulled up something here from the U.S. consumer confidence from the conference board. This is last month, end of last month. By the way, we see the ticker. Brazil's down, China's down, 5.4 consumer confidence, 0.81% employment trends. I'm still going to trip over this. The euro is down. France looks like it's even. Germany is down. Globally, the leading economic indicators are down 0.2%. So India is up. Japan is up. Mexico, you get the idea. It's always going to be a mixed bag. There's always going to be winners and losers. And the only thing we want to look at this is consumer confidence retreated in January. It's a slight slide. There's not a big deal. In my mind, it's not a great deal in the index, 28th. It's just that January usually brings a lot of new fiscal year price increases that get set, they get brought in. Maybe they're just a little higher than what Wall Street looked for. I think that they probably were. Pulled back a little bit, and yet spending is up. Consumer confidence index declined by 5.4 points. And remember, this is over 100. Right? It's not a topped out, it's just an index. It's not a 0 to 1 type thing. December's reading was 4.8 points to 109.5, was still down 3.3 from the previous month. Present situation index based on consumers' assessment of the current business and labor market condition. What is the word for that? We have a word for that right there. Is feels. It's our feels. That's all the consumer confidence is trying to take the pulse of what our feels are today. It went sharply down, dropping 9.7 points. We've got this. Let's not dwell on it. Let's go to our example of how our feels, reporting feels of other people can affect our market. Well, look at this headline from the AP. I guess see this a while ago. Robert F. Kennedy has been confirmed. I don't know what the deal was. I'm not a big Kennedy fan, not highly political, but I think he had some people shook up because he was an outside the box thinker. Now here we go. Politics. Says politics. Guess which side this is going to go. The latest inflation report shows that high prices are Trump's major economic challenge. Let's throw it all on him. But remember, last 4 years, everything was fine. We have our egg prices. We know eggs are going crazy. We know we've got avian flu reported, so our chicken sandwich or Chick-fil-A might go up. I don't know. And then right here is the little bit where we actually talk about something. The U.S. inflation accelerated last month as the cost of groceries and gasoline rose, a trend that will likely underscore the Federal Reserve's resolve to delay any further interest rate cuts, according to this little video, Miss Cody Jackson. Now, let me take a deep breath and ask you people who do watch this, because sometimes I get hit with, you're always a contrarian, you're always going against the news. But what did I tell you when we had our first big cut in Q4 of 2024? I said it's probably political, and our numbers, by even what the Fed said, of the 2% that we never got to, if they were really meaning what they said when they said we need to hit 2% before we cut because it's going too hot, the economy's too hard, they cut the rates a half a point. And you remember just before that, we had your usual salesman type screaming, we need to get rate cuts, because they know that's what you want to hear. But what am I saying? We had a % cut from the target rate Q4 of last year, and now we have inflation. I don't know what to tell you. Economics is as much about feelings as anything else, but some of the facts, even though they may be tainted by politics, they still are facts that say that we shouldn't have cut the rate. It got some people into houses, we got some mortgages done, got some deals done, but it didn't really change the reality that we're living in. It's not stopping the avian flu. It's not changing the weather. We can drill all we want, but it's going to take a while to show up. So yeah, anytime we have an energy price go in, and we're talking tariffs as a negotiating thing, we've got a huge deal. I should have put that in there. A huge Japanese investment coming to America. It's going to help us. But there's going to be some seasonal adjustment. And remember, it's January. That's when price increases go. Wall Street was expecting about 0.3%. We got 0.5%. So it's a little higher. But let's go back and look at this. Josh Boak and Christopher Ruger, I hope I said it. There's a B in there I didn't pronounce. The 12th, which would have been yesterday. And as we go through here, it's Trump said this, Elon said that. Tariffs, the world is coming to an end. And in fairness, it is in the politics section. But nowhere in there did it actually mention what our inflation rate was. Never gave us any actual data. The AP, this article, now I do want to point right there, what does it say? The markets work off of feels. We just saw a little bit of a spike in our daily rate on Mortgage News Daily. I wouldn't be a bit surprised to see, maybe it may stay up a little bit, but it's not likely to stay there long. It's just, I think people trying to time the market, and timing the market never works. People who successfully do it usually have inside information, and we watch the watchers. When they buy, we buy. When they sell, we sell. Well, we see that blue line going up. It spiked up on the inflation news, but if it turns out to be a big nothing burger, it's likely to go back down. And we know the daily rates are always more noisy than the weekly rates. Now, let's go back to that center panel that I just was at. U.S. Labor Statistics Bureau, BLS, because it's going to hit the headline for today. It was released today. The PPI for final demand rises 0.4 in January. Services increased 0.3. Goods increased 0.6%. Well, the goods I kind of understand. It is price increase time of the year, January. PPI is sort of a leading indicator versus the CPI, which is, we've gotten all the way to the final sell consumer. CPI items rose 0.5% January. And here's one good for home buyers and sellers. Shelter up. Well, your home prices are not likely, at least not in our market, to go down. Not much. All right. Real average hourly earnings for all employees is unchanged. No wages, no up or down. That's good. Payroll employment rises. More people working. That's good. Unemployment rate edges down 0.4%. That's good. That's still just 2.7. That's still not long in the past. We've got a mixed bag. We always will have a mixed bag. All right. PPI report, producer price. This is from CNBC. I like to throw that in there. I think that a lot of viewers may look at them as being more middle ground. I think they're a little bit left, but they're not terrible left, and they're certainly not terrible right. So overall, pretty fair organization, although they may disappoint me next week. CNBC Economy, Jeff Cox, he does a lot of work on that. Today, updated 2 hours ago, we see producer price report points to a softer Fed inflation measure than feared. So that just means that, kind of what I just said, we never hit 2%, and the Fed pre-election pulled the trigger, dropped it 50 basis points, 25 and 25. Now we're seeing inflation knock me over with a feather. It just means that was premature. Maybe we're just going to have to stay higher for longer before the Fed drops it down. Bond prices or the bonds will react accordingly because they're not getting their cheap money quite as quickly. Go back over to the page. The PPI went up, seasonally adjusted 0.4. The Dow Jones estimate was 0.3. So, our emotions, we're in our field. Stock market futures move slightly higher following the release of the Treasury yields fell. Wall Street strategists cited details of the report that suggest slightly more benign inflation picture. Well, yeah, what do we see? PPI went up 0.4 instead of 3, 0.1%. It's not like it's, and how much of that is fuel? We'll get to that. A gauge of wholesale prices rose more than expected in January, though some details of the report indicated that the pipeline inflation pressures are easing. So mixed bag. Producer price index, which measures producers get for their goods and services, increased by a seasonally adjusted 0.4. Dow Jones estimated 0.3. Excluding food and energy, the core PPI was up 0.3, which is in line with the forecast. So it says we really didn't miss it that much. Diesel fuel and eggs. Stock market futures, I'll give you this. This is a pretty good, CNBC did a pretty good job. You'll have these links in your description as always. We want to look at this one, TBNP. This was Kim Souza just about 2 days ago. It's the 13th day, so that would make the 11th 2 days ago. We have it here. January retail sales up 5.44%. Consumer confidence falls. So we're still spending. That's our economy rising. That's our inflation. It's the buying of the stuff that's causing the inflation. When people stop buying, if they're scared enough, they stop buying, the prices fall because people can't move their merchandise. You know how that works. So trade tariffs, not only are there being spoken about to balance and to bring investments back to the United States and keep things from leaving, but they're also a threat that may cause a little bit of a reaction that we see. But it's January. Fiscal years are starting. We expect to see price increase. Let's not lose our head right away off this stuff, okay? Now, I do want to show you one thing that in the first pass of this show I didn't get to. We'll show you right now. The local market update, right? Days on market at 37. If you want to concentrate on the marginal at 1%, pretty close to zero, but it is up 37 days. That's very reasonable. I've seen it much worse than that in my lifetime as a consumer. Median price still going up 4%. This is our January update for the greater Nashville area. Active listings increasing. We're going up 13%. We're getting ready for the springtime, the green time. Looking good to me. We're getting more inventory out there. Pending sales down a little bit. Yes, anytime there's uncertainty. January there always is, year end. Closings down a little bit, 2%. Not all that bad. To me, I'm feeling pretty good, even though I see some negative numbers. I tell you, I feel bad whenever all I hear is negative, and I feel a little bit bad when all I hear is positive. I don't trust someone who's all sunshine and lollipops. I want to know where my risk is. I want to feel like I have some information I can act upon, even if it just makes me want to go get more information. Well, what do you say we get over to our numbers and get this wrapped up? Hello, I'm Delbridge of Benchmark Realty, Murfreesboro, Tennessee. If you are currently unrepresented and would like to know how to compare up to 3 properties side by side and room by room, then go over to my new YouTube channel, CallDelToSell. That's one L and Del, no spaces. Watch the demo on Real Scout and then call me and we'll set up your exclusive ad-free account today. Last week, 2/6 of 25, we had 22,428 in the opportunities. That has both coming soon, and those are actually available to take a bid. 3707, it looks like, by my handwriting. We'll correct it if it's wrong. It's also up in the under contracts still showing. 17% was the ratio. We had 22,512 this week to 1325, and we had 3875 in the under contract still showing. They also rose. The ratio did not remain steady at 17. We'll see you next week.